Hey everyone, welcome to More Than Mortgage. I'm Chad Anderson. He's Zach Jones. We are talking VA loans today and why they are amazing. And we talked about seller concessions last week, and we talked about how things can become more affordable if you would just apply seller concessions and leverage them in the right way and take advantage of the housing market because it's still giving you opportunities. But today we're focusing on the veterans because the veterans have so many more outlets from a great program, great loan, great rate, great little twists and little features to the loans. So I can't wait to dive into these 4 or 5 things. Really, this could be an all day long episode.
Right.
Zach and I, that's not very far fetched, but today we're going to keep this into the 15-minute window. And Zach, I mean, VA loans, man, we obviously love the vets. Veterans Day was just a week ago. We're recording this on the 18th. It was just a week ago. But it's one of those, like anytime anybody brings it up, I immediately say, it's my favorite loan in all of mortgages. It's
Right.
the best possible deal that you can have. It is by far number one on any situation. But tell us your background on the VA stuff, what you like about it.
Well, I'm going to add that before I go into what I like about it. The thing that really kind of fires me up about the VA loan is that, in spite of the fact that it's such a spectacular way to finance a home purchase for those who qualify for it, it's a limited qualification. I mean, you have to have served our country. But the this is the kind of the dirty little secret of real estate. There's a lot of bias against VA loans, and
Yeah.
it really pisses me off. It's just there's a lot of mythology. I ran into a terrible bias against a VA borrower within the last year, and literally the buyer's agent and myself, we joked about doing really bad things to this guy because he was so unbelievably and openly biased against VA buyers. So much to love about it. Number one, let's start with the basics here. You've got to be, you have to have served our country up to a certain standard. You have to have qualified for that through the veterans benefit, and you can do it with service in the National Guard or any of the armed services. But once you qualify, you literally have an unlimited loan amount for 100% financing with no mortgage insurance. And in our world, Chad, it's not that true in every mortgage originator's scenario, but the way that the companies that we've chosen to work with, that pricing is a lot better than conventional loans. So it's like so good in so many ways. Catch here, asterisk, there is a funding fee that I believe that VA uses that like a mortgage insurance product. It's a one-time fee. They charge it at closing, and it's added on to the loan. So, typically you're probably closing, if you're using 100% benefit on it, no down payment, you're closing with a little over 100% loan. But VA also allows for waiver of that fee if you're a disabled veteran and you have over 20% service-related disability through the VA disability system, or if you're a Purple Heart recipient, you get that waived. So it like turns the best loan in the country into mind-blowingly great.
Yeah, here are the things that I love about it. I mean, first, some of the basics, like you said, you can buy 100%, or you can do 100% financing at any loan amount. Now, some things beyond that, people don't realize you can use your VA eligibility twice. You
Right.
can use it without even having to sell the home that is currently using VA entitlement. You can do that. People don't realize that a lot of times. So you can buy a home, keep it for a year, 2 years, and then you say, hey, I need a bigger home, or I'm moving. I just want to relocate. I just want a home across town, whatever the case may be. You can buy a second one and keep that one as an investment property. Now,
Mm-hmm.
there's some calculations and whatnot. It's not a free for all, but you can do it, and it happens every day. Some of the other things I love, there's technically no minimum credit score for VA.
Right.
There really is not. Now, most lenders are going to cut you off at around 580. Now, we'll go lower than that, but a lot of times if you're below 580, it's difficult to qualify. Even at the 580 mark, it can be more challenging, obviously, because it's still lower credit. But they don't have a minimum. There's also no maximum debt ratio. VA calculates your ability to buy a home on so many different things. And it's the main piece of it is residual income. And without getting too deep in the weeds, residual income is simply what's your gross income, what's deducted from your paycheck. Let's factor in just kind of a formula, standard amount for maintenance on a home, utilities, electricity, and so forth. Let's count your liabilities and let's count your house payment and how many people live in the home.
Mm-hmm.
And if your residual income is higher than the minimum guideline, then you've got a great chance to qualify, even if your debt ratio is 60%. I've seen approvals at 70% debt ratio.
It's the most common sense way to evaluate a person's ability to repay. It makes so much sense.
Because residual income tells an underwriter how much money you have left over to live on at the end of every month. And can you do it? Versus when Zach and I qualify you, we're not trying to put you in a bad situation by any means. But a lot of times these guidelines are written to put people in a certain box. And you just say, get to this ratio and you're going to qualify. But there are numbers of ways to cram you into that ratio to get you into that house. So those are some of the things that I really love about it, because again, they do get a bad rap and a bad stereotype, and they shouldn't. No PMI, no upfront funding fee if you're exempt from that because of your disability through the VA. Again, all these different things. And I want to get to seller concessions and closing costs, because that's what Zach and I talked about on last week's episode, which, by the way, you can watch here on the channel. This is our 50th episode. So we also thought this would be a good way to honor the vets with number 50, a good topic here. But Zach, anything that either of us left out or anything hit your mind? Because I do want to get into the seller concessions part of it.
Yeah. So one of the things that we didn't talk about, that's kind of a nerdy thing on the back side, but certainly should go a long way toward eliminating the bias that we see in the real estate industry, is how VA handles appraisals. And again, this is a common sense strategy. And what's ironic about this is I can rail on endlessly about how little common sense is present in federal agencies. And I know that the VA situation, from a veteran standpoint, VA does not provide efficiency of service and fairness of service. And, there's oftentimes complaints that we're not getting what we were promised. But I will say that in the VA home loan program, it's really pretty spectacular. I mean, from a loan originator standpoint, when I can go and do a government loan, there's more to it. We have to do more work on the origination side. We gladly do that, but there's so much kind of basic common sense efficiency about VA loans, and the appraisal system is one of it. So in normal appraisal situations, normal loans, you order the appraisal, the appraiser comes back with a value, and you kind of are pretty much, in most situations, stuck with that value. And if the value comes in short, then you do have the option to appeal that, but it's not a very efficient system, and people's feelings get hurt. And I think that it's my personal opinion that appraisers might dig their heels in about challenges on things. VA system is different. They have this thing called Tidewater, where if an appraiser feels like he's running short on value, before he ever issues the report, he will bounce back to the interested parties and say, I'm invoking Tidewater. If there's special properties, comparable sales that were recent that haven't been recorded that I need to consider, please provide me with a list of those properties that you've used to support the value that you came up with in the purchase price. And so,
you a heads up. That's what's so great.
Well, it's so crazy. And I say common sense because it's human nature. If I sign my name to something and I've got this opinion, I'm in a defensive position if it gets challenged.
Yeah.
In the Tidewater situation, the appraiser says, hey, I don't have an opinion. Y'all help me help you.
Right.
And so when then we've got a situation where everybody's working cooperatively. The appraiser, and these are VA appraisers, highly trained, licensed appraisers, they're not going to be unduly influenced by someone providing an address and a list of comparable sales, but they always want to consider it. So even when Tidewater comes back, there is an appeal. I forgot what they call it, but there's a kind of a last appeal of value. And so it just fits into this category that nobody can know everything. And we all want help. We all want the deal to close. What's in the best interest of the veteran? This person wants this house. They want it at this price. Help me understand where the value came from. And, it's just an infinitely successful and friendly way to do things in that appraisal process.
Yeah, it's really interesting how many people shy away from VA because of the whole appraisal thing and talking about, well, it gets nitpicked, it gets that, it gets this. Zach, how many VA deals have you done that died over an appraiser?
Um, I'm trying to think. I don't know that I've ever done one that died on appraisal.
So in 14 years, I've had two.
Okay.
One of them was Tidewater, significantly lower. Honestly, it wasn't that far fetched. Like, it definitely should not have hit purchase price. Was it a little more on the cautious side? Maybe, but it definitely wasn't going to be the purchase
Right.
price. And it was, I want to say, around a 450 purchase, came in at 420, and basically neither side was willing to meet in the middle close enough.
Okay.
The other one, though, the other one died. It really wasn't because of the appraiser. The appraiser's actually the one that discovered it. So to be fair, it's 1 in 14 years. This was a home that was built in like 1910 out in the boonies, and house 5-6 acres, old farmland, all that kind of stuff.
Right.
And they just simply couldn't find things. They couldn't find the septic. They couldn't find this over here. They couldn't figure things out with the survey or the plat maps, or like they just couldn't find things. And
They couldn't really check off the boxes that are necessary for a minimum approval, right?
Because essentially the appraiser's saying, I don't even know what to appraise. I don't know where the property ends. I don't know this. I don't know where the septic is. I don't know where, it just on and on. So again, it was more, that one was more a really old home and inspection issues aside from the appraiser that he or she could not control whatsoever.
Right.
So, all right, let's finish up VA. One thing we didn't even mention yet, Zach, is VA's cash out ability and the Earl, because we get distracted away from refinances. Okay. So
gets better and better, right?
Yeah. So a VA Earl means if rates drop and you have a VA loan, well, guess what? You just automatically get the lower rate. And what I mean by that is you can close in 8 days. And at that point, you can get whatever the market bears. And there's a formula that says, hey, these are the closing costs. These are your savings. And the lender is not allowed to charge you too much, because if they do, VA will shut it down and say, no, this isn't beneficial. You're being predatory.
Yeah. So it's not good enough.
Yeah.
Right.
Say you have to be good enough. The Earl also doesn't require income, doesn't require assets, doesn't require appraisal. Yeah.
Streamline. It's super streamlined. Like the only really streamlined loan, right? Everybody says streamline, but the Earl is the streamlined loan.
Yeah. It's so easy. You won't believe it. I mean, you really won't believe it. So, that's one on the Earl. The second is cash out. You can cash out up to 90% of the home's value. And in some cases, if you meet the exceptions, you can cash out 100% of the property value. Think about that. 100% of the property value you can get cash back on. So really crazy, that you have those opportunities. And then the last one before seller concessions, I'll let you run with it, is VA loans are assumable. Now, let me put the little asterisk beside this and say assumable loans can sometimes be a pain in the arse, but it is at least a feature, and whoever assumes the loan from you does not have to be a veteran. They can be a conventional buyer and assume your VA loan. So if you've got a 3% interest rate and want to sell your house, somebody can buy the house and assume the loan, but they do have to get the gap, between the loan amount and what your purchase price is going to be. They got to figure that out. But just 3 things that we didn't even mention to add to how good this is. So let's put the cherry on top here with closing costs and seller concessions, because Zach, I think one of the big myths is VA caps you at 4% in closing costs, which is incorrect. VA allows for unlimited closing costs to be paid for by the seller as long as it's reasonable and customary to the market. So how many times have you run into that? And then the other little tidbit, if you want to elaborate on it, or I can, where the seller can pay off debt or give the buyer gifts at closing.
Right.
It's a true thing. They can actually give things to the buyer.
So the seller concessions, that limit of 4%, it has to be usual and customary for the area. And Chad, I don't think that I've ever been in a situation where I've stretched that out beyond the 4% limit. And we're kind of in a market now where, on anything maybe below $350,000 or $400,000, there's oftentimes 4% in concessions, because the typical 3% gets chewed up, and then you've got 1% of discount points. So, and I personally have never used this additional seller concessions to pay off debt, but that's a situation where if you had a veteran buyer who needed to pay off some debt in order to qualify because they were bumping up against the automated approval and the ratios, or maybe it was just a kind of an emotional thing that says, I want my payment at $2,100 and I'm not going to do anything else. But
Right.
You had a situation where there was $3,500 left on a car note that had an $800 a month payment.
Right.
Well, you could use seller concessions to pay off that $3,500 car note to help the veteran feel better about closing in a situation that says, well, wait a minute, I've got a little bit of breathing room now in my monthly budget because I no longer have a car payment. That's perfectly allowable in a VA loan situation.
So let's think about this in 2 separate columns for everyone visually here. Okay.
Yeah, that's a good idea.
Closing costs over here, this column, closing costs. That's your discount points, your processing and underwriting fees, your appraisal, your credit report, your title company, your state and county transfer taxes, your mortgage deed recording, doc stamps, all that stuff. Transaction costs, the cost to make a loan go through. Those are closing costs. There is no limit to that. Okay. Now, a lot of those costs are just fixed. So when we say there's no limit, the only reason that you would apply the no limit rule for the most part is if you're trying to buy the interest rate down really low. That would be about it. Now, so that's closing costs. No limit over here. Let's go to this column. Seller concessions, 4%. Now, of the 4%, the only thing that a lot of times we lump into closing costs are prepaids and escrows. Your escrows count towards the 4% maximum. So in seller concession, your escrows, you have to back that out of the 4%. But if you're doing a $400,000 loan, and I'm seeing more and more sellers who are willing to negotiate, make deals, and almost on the verge of desperation to sell their houses. I talked to somebody today who's dropped their house now $60,000 since it first went on the market, from $430,000 to $370,000. Still hasn't sold. So people will do this. Okay. What if you had 16,000 in seller concessions? So think about that for a minute. If you had 16 grand, just like Zach said, say 4 grand is for your escrow. All right, you're down to 12 grand left. but you got a credit card of $7,000 a month that's going nowhere, or $7,000 balance, it's going nowhere because the payment's $200 a month at 29% APR, but you don't have the money to pay it off.
Right.
Then you co-signed with Sissy, that's Zach's favorite, and you got a car loan or an installment loan or something, and it's another $4,000 or $5,000, and that's at 12% interest with a $500 payment. You've now eliminated $12,000 of debt, $700 a month, just because you did a VA loan. And the catch is, yes, you could do it to qualify, right? Like you could say, hey, I have to have this to qualify. You also could simply negotiate it into the deal.
Mm-hmm.
Just say, hey, I do want the closing costs, but VA also over here allows me to have you pay my debt for me. And even though I don't need you to qualify, I still want you to do it. And I'll buy your house. Like
if the house appraises for if the house appraises for the contract price, then that's a way to build it in.
And you can either build it in, or again, some sellers, do you think the seller today who had the house listed for $430, now it's $370? I guarantee you they'd take $430 with paying all closing costs and paying 4% concessions, right?
Absolutely.
All day, every day.
All day. The math works on that.
So that's what I mean by these deals exist, and people have to wake up on these VA loans and say, like, hey, I can get some debt paid off. Where can you buy a house and get debt paid off and you come out of pocket zero?
Right.
That's why these loans are fan-effing-tastic. It just doesn't get any better than all of these. And by the way, I think we said it, but just in case we didn't, to reiterate, these are the lowest rates on the market. The VA loans are going to be your best interest rates. They just are. And they're going to be your lowest payment. They just are. And they should be.
No mortgage insurance. I mean,
yeah, they should be. Yeah.
100% financing, zero mortgage insurance. So if you have a question about whether or not you qualify for a VA loan, you always need to talk to a loan officer. I occasionally get those calls, Chad, where people are like, yeah, I'm a VA candidate. You know, the real estate agent says, oh, they're qualified for a VA loan. You're good. And you find out that they're operating under some myth that, oh, my dad was a retired service member and was a vet, so I had the VA benefit. Completely untrue.
Yeah.
Sometimes people think that they have the VA benefit, but they got in a little bit of trouble, got pitched in the brig for something, big violation, dishonorable discharge. They don't have the benefit. Right. Sometimes people have maybe foreclosed on a property. There's a partial restoration in there, some things are left undone. Sometimes they need a little bit of work, but if you're a qualifying service member, discharged from the service, or you're a National Guard and you did, I can't remember. I don't run across those qualifiers very often, so I don't remember the minimum number of years in service in the Guard. We need to take advantage of the benefit where we can, because it is so spectacular.
Yeah, it's amazing. So we could keep going. We've already gone over a little bit from what we said at the beginning, but we could go on for hours on this topic. If you have questions, reach out to Zach, reach out to myself, hit us up on the socials up here at the top. You got Zach at Zach Jones Loans, at Mortgage Dad Chad here. DM, comment, like, subscribe, hit the bell, share, tell your friends. Go ahead.
One more piece. If you're a real estate agent and you have an old bias, or you heard about around the office that VA loans are tough to do, and you don't want to choose those buyers over other buyers, you need to be working with somebody who knows how to do VA loans, because that is a complete and total unfair mythology. We can move these things as fast as any other loan product, and they're so much better. There's so much more features, and there's so much more flexibility with VA loans that you are absolutely missing out if you're sitting operating under those old myths.
100%. Yeah. We can't say enough good things about it. And there's so many different strategies and angles and approaches to this that you're really doing the veteran a disservice if you take that attitude, or if you discount it or discard it or push it to the side or look at another loan program. If somebody's eligible for VA, that's the path they need to go. 100%. All right. That'll do it for us. 50 episodes. That means poor Zach has spent, what is that, 25 hours with me just on a video screen. That is it's a long time to be hanging out on a virtual site here. Everybody have a great one. Thanks for being a part of the journey. We're going to continue these. We hope you continue with us, and we'll see you actually not next week. We're going to take the holiday off. We'll be back first week of December with a fresh new episode. So have a great rest of the week. Happy holidays, happy Thanksgiving, and we'll see you soon.
See you next time.